Alright, good morning everyone. Let's fire it up. Okay. So last night's session, the S&P and Nasdaq and greater U.S. markets was poor to say the least. We opened at the highs and closed at the lows. It's never a bullish result. I mean, Asia was so strong overnight. You had Nikkei the previous night up 7.7%. You kind of thought it was a foregone conclusion that the S&P was going to also manage to hang on to something, and it just couldn't. You could see really right there at the beginning of the session there were just never any buying during the main part of the session. And we've started to firmly entrench ourselves into a bit of a range. We more or less topped out at the exact same level that we topped out in sessions only about a week ago or 2 weeks ago. So I think that's kind of the line in the sand as we speak on the S&P future, maybe up around 1993-ish. Just below 2,000, somewhere in there. We had a couple things also happening yesterday. One of the biggest things, obviously, was the big Apple presentation, unveiling a few different things: the new iPhone 6s and 6s Pro, whatever the big one's called. We had the iPad Pro that came out, and also a new Apple TV. Market knew all of that stuff was coming, and there were no really major upside surprises, I think, so sold off a little bit there. Commodity prices traded well early in the session yesterday, and really as we moved deeper into the U.S. Session, we sold off pretty much across the board. Copper came off the top after having a really strong session early. Oil was off well over 3%. We had silver, platinum, gold, all of them down, getting hit yesterday in the second half of the session. So the IEA came out yesterday and updated their energy outlook, basically throwing a massively wide range for expected oil prices between 32 and 73 over the near term. So just keep that in mind. I mean, that's the most ridiculous range I've ever seen, especially when prices being this low. But it is what it is. All right, moving on to the Asian session. Bit of a reversal from yesterday. So Australia gave back up the gains that it had made. Nikkei gave up a piece of them. Hang Seng down 2%. Shanghai managed to kind of hang in there, but just kind of following on the back of the States. I mean, there's no leadership there whatsoever. Just dovetailing from the States and waiting today to see what the States is going to lend us and where we're going to move from here. Obviously, next week's announcement is quite key. I would expect that we'll start to see markets start to wind down a little bit, maybe volatility to even wind down a little bit going into the Fed meeting, with people waiting to place their bets after the announcement's made. Right, so chart to interest today: Investor Intelligence Sentiment Index. So you can see here we've moved really hard from a bullish position to a bearish position very quickly. And I think one of the things that's interesting here is that we got as low as we did, but we've already started to turn back up. So we're starting to see bearish sentiment start to rise even more, up to 27.9%. I mean, we were exceptionally bullish for a while. We're probably going to need that to continue to climb a little bit for us to really see the bottom put in this morning, or this year. Corporate action report today. Okay, we had first rand outs earlier this morning, pretty much looking more or less in line. I think we're actually at 376. This number relative to 381. The important thing to look at here is probably going to be more around the commentary. And I haven't gone through these numbers intensely, but from what I understand, they are, there wasn't a really positive outlook being sold from the CEO there, and then also throwing in the back that they didn't announce a special dividend, which a lot of people were expecting might not boost the stock this morning. So I would expect that maybe, if anything, the share could be off a slight bit this morning. We also have Discovery is coming out at the opening bell, and the guidance is up at about 15%. Out. Okay, sorry. I'm late this morning. I'm not sure what Discovery's numbers look like, so you're on your own with that one. All right, moving into market data today, we have Japanese machine orders, a bit of a miss, PPI numbers at a miss. We had Chinese CPI, which is actually a touch hotter than expected, which is quite interesting considering where we are in the with the state of the economy. Everybody thinks is so weak, and stock market getting hammered. The fact that CPI is a little bit hotter is quite interesting. Bank of England rate at 1 o'clock. We've got local manufacturing production at 1. Initial jobless claims at 2:30. Crude oil inventories at 5 o'clock as well. Right. Let's get on to the maps. Not going to get too extensive here this morning, but first thing that I wanted to look at is local index. So you can see here yesterday we got up to, there's a couple levels that you can look at here. 45,000 really the first level. I really think you could also kind of look at next level maybe being about 45, 300, 350, somewhere in there. But anyway, that was kind of our risk range. We literally got rejected right at 45,000, right at the open of the session, and then closed on the lows. Definitely not what you wanted to see out of the bullish camp. We really start to look like we're making a bit of a bear flag in the index here. And I'll just zoom that in a little bit. You can get the picture of exactly what I'm talking about. If we drop out the bottom of that, I would throw that number in, I don't know, maybe around 43,700. We drop that sort of level, and it'll start to look really, really shaky below that point. So I think that's kind of a level to look at for the time being. Maybe something to pay attention to if we slip. Then this chart will start to look very, very bearish again, and that's, I think, very important for us. MTN actually has that exact same chart, but it's maybe a couple days ahead potentially. You can see here dropped out of its bear flag here. Still looking for a lower target, possibly all the way down to about 160 bucks. Definitely not looking good here on the maps, and I think that if we did get down to 160 bucks, it'd probably complete our target of dropping from when we dropped 200 all the way up from when we peaked up here around 245. All right, moving on, let's look at Kumba. This thing it's actually been a bit of a non-event. It's lulling everyone to sleep, I think, and I've actually got a long position here simply because the rest of the mining space has been consolidating and moving higher. Felt like they bottomed, and we're starting to squeeze, and I know that this thing has still a large amount of shorts out there, especially relative to the volumes that it trades. 92 has really been the line in the sand, so we've been hovering in this little 7-8 rand range, and we need to get a close above 92. We've gotten above there a couple times intraday, traded up to 93, 93.50, but couldn't sustain it. Above 92, if we get a close above 92, then I think we can really break out of this range and start to move higher. We'll have to see if what's going to happen going into closeout with them coming out of the index. We're going to see a lot of flows there, the ARB guys versus the index trackers, so just keep that in mind. Last thing that we'll look at this morning is RMI. So, MMI coming out with the numbers yesterday. I might as well do RMI today. RMI, you can see it's failing again at 42. 42 is a major level. I think if we can start to turn down here, then we will start to look relatively head and shoulders here out of this pattern below maybe 39. And then I think you could see a quite significant sell-off if we get below that sort of level. So watch this. We start to slip below what's been really kind of this ascending triangle. Then I think that also could be a chance to nibble on the short, maybe kind of leaning into it if it gets below about the 39 level. And that's it for today, guys. Good luck out there.